Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we'll be talking about the main event of the week, and apologies for that. So we'll be talking about the main event of the week. The main event of the week is the European Central Bank interest rate decision, or the ECB rate decision. We'll also be having US retail sales data coming up in the afternoon, and hopefully we will be able to trade this from an informed perspective. So as usual, I will begin with a disclaimer that this session is not investment advice. It is not a recommendation to trade, so you should always do your own due diligence. So that being said, let's get started with the economic calendar, try to understand the key highlight events, when they will be happening, how they will be affecting the markets. And once we understand that, then we can jump straight to technical analysis. So as you join in, kindly say hi on the live comment section, and these will confirm that things are working just fine. And if you have any questions relevant to the presentation, feel free to type them in the comment section, and I will be responding to that right away. So if you're watching these from X, remember to like and share. If you're watching this from YouTube, like and subscribe to the channel. Let's get things started. So from the economic calendar, as you can see, we had early morning data, and this is from Australia, where the number of new jobs created in the past month was 64.1K, and this beat the expectations of 25.2K, and of course was higher than the previous reading, which was revised from 47.5K down to 42.6K. So then the unemployment rate basically remained the same at 4.1%, which was better than the expected 4.2%. So on the other hand, looking at trade balance in Japan, we had an improvement to negative 0.19 trillion, which is basically better than the expected 0.49, and of course better than the previous 0.47. So going forward for the rest of the day, we'll be looking at the final core CPI for the Eurozone, which is expected to remain at 2.7%, and final CPI year over year, which is expected to remain at 1.8%. So in most of the time for the Eurozone inflation report, when you're looking at the final, it's usually very close to the estimate. So there's usually no surprises. So that's why it's labeled as low impact news. So fast forward to the main event of the day, we're looking at the main refinancing rate, which is another term for the central bank interest rate for the European Central Bank. We are expecting a 25 basis point rate cut from 3.65% down to 3.40%. And immediately we'll also be getting the monetary policy statement from the European Central Bank. That will be at 3:15 p.m. Then later on, that should be 30 minutes later at 3:45 p.m., we'll get the ECB press conference, which is headed by the ECB chair, in this case, presenting the monetary policy statement and responding to journalist questions. So, of course, we will be getting some good volatility from Christine Lagarde. So, on the US dollar side, at 3:30 p.m., we'll be getting the retail sales data, which is basically a measure of consumer purchasing power. So, it basically tracks the sales that are made in major retail chains across the US economy. So this ranges from supermarkets, apparel stores, clothing stores, car sellers, and so on. So when you look at the retail sales data, if it shows, let's say, a bigger than expected increase, it basically shows that the consumer purchasing power and appetite for spending is high. And as a result of that, we tend to see the market reacting to this. On the other hand, if it's lower than expected, then it shows that the consumer is weak, and it also has an impact on the markets. So on the stock side or the equities side, if the retail sales are increasing, it shows that the companies are selling more products. And in that case, it tends to be good for equities. So higher than expected retail sales report is usually positive for the Nasdaq, the SP 500, the Dow Jones, and even the Russell 2000 index. So on the currency side, if there is more retail sales, it means that there is more demand for the dollar. And in that case, it tends to be positive for the dollar. On the other hand, weaker than expected retail sales report tends to be negative for the dollar. So we'll also be getting the unemployment claims data. These are weekly report, so it doesn't have as much impact as the monthly retail sales report. So in the previous reading, we had 258K claims. And now we're expecting this to be reducing to 241K, which would be an improvement in the job market. And in that case, it tends to signal a positive thing for the Fed. So it shows that the economy is responding well. In that case, we tend to see the Fed being more comfortable with rate cuts. And in that case, it tends to weaken the dollar. So looking at the euro area interest rate, the ECB is expected to lower borrowing costs by 25 basis points in October 2024, following similar moves in September and June. This would bring the key deposit rate to 3.25%, the main refinancing operations rate to 3.65%, and the lending rate to 3.4%. So investors are also expecting 3 further quarter point reductions through March 2025, including December. So inflation in the Eurozone fell below the ECB's target of 2% for the first time in more than 3 years in September. It now stands at 1.8%. Additionally, there are increasing signs of a weakening Eurozone economy, with GDP growth being revised down to a modest 0.2% in the second quarter, and PMIs continuing to show a contraction in the manufacturing sector and slowing services growth. So this has been the path of European interest rates or Eurozone interest rates, with the first hike happening in July 21, 2022, where the ECB moved from 0% interest rates to 0.5%, and then they kept hiking until they got to a maximum of 4.5%. So since then, inflation has subsided and gotten back towards the ECB target of 2%. And after achieving that goal, what we are seeing is the ECB now cutting rates from 4.5 to 4.25%, and then in the previous decision, from 4.25% in August to 3.65%. So today we'll be expecting a further rate cut, which will drop the interest rates to 3.40%. So looking at the euro area interest rate, the ECB is expected to lower borrowing costs by 25 basis points in October 2024, following similar moves in September and June. Sorry, I'm looking at the wrong report, not that one, this one. So in this case, now we are looking at the inflation rate. So annual inflation rate in the Eurozone fell to 1.8% in September 2024, the lowest since April 2021, compared to 2.2% in August, and forecasts of 1.9% preliminary estimates showed. So inflation is now below the ECB's target of 2%. Prices fell much more for energy, down 6% versus the expected 3%. And inflation slowed for services from by 4% compared to the expectation of 4.1%. While prices for food, alcohol, and tobacco increased slightly more by 2.4% compared to the expected 2.3%. Meanwhile, core inflation rate eased to 2.7% from 2.8%. So among the bloc's largest economies, inflation slowed in Germany to 1.8% versus the expected 2%. France, inflation dropped to 1.5% versus the expected 2.2%. And Italy, inflation dropped to 0.8% versus the expected 1.2%. So as for Spain, it was 1.7% versus 2.4%. So of course, across board for the top major economies in the Eurozone, inflation is well below the 2% target. So the ECB expects inflation to rise again in the latter part of 2024, partly because of previous sharp falls in energy prices, will drop out of the annual rates. Inflation should then decline towards 2% over the second half of 2025. So this has been the path of inflation rate in the Eurozone. So if we take it a notch higher and look at the 5-year history, then you can see that inflation began spiking in January 2021. That was right after COVID. And from then, due to the easy monetary policy or due to the amount of the money that the European Central Bank printed during COVID, it caused an increase in prices, which was previously 0.9%. It went all the way up to top at 10.6% in October 2022. So in response to this, the ECB kept hiking interest rates and got to 4.5%. And that was sufficient tightening to enable inflation to slow down. And it has been doing that gradually, reaching 2.4% in November last year. And then slow reduction, with the most recent one being 1.8% in September 2024. And if you check clearly, the last time we had inflation below 1.8%, it was in April 2021. So we are looking at a 3-year cycle. Inflation has now subsided, and now there's no reasonable way of keeping interest rates higher since inflation has gone back to target. So that being said, I believe now we can jump straight into some technical analysis and try to understand where some charts are heading. So we'll be looking at the major pairs, commodities such as gold and oil, major indices before we end the session. So good morning, Maureen. Good morning, Samuel Njoroge. Good morning, Jason. Ken Moneki. Good morning, Irene Kariuki. Good morning, Nancy Obino. Welcome to the session. Hello, Dennis Mwangi. Thank you for joining. Melvin Munene. Thank you for joining, as well as Consolata Njeri. Thank you for joining. So I can see JT Agencies. Thank you for joining. Peter Kihenjo. Thank you for joining. There's a question from Trapscade, most promising pair today. We'll be looking at that. So right now, let's just jump straight to some technical analysis and see what the charts are showing for today. So the current chart that you are looking at is the chart of Bitcoin, which has been on a very strong rally this week. So if you look at the price action history for the better part of the week, the market literally opened here at the start of the week. This was around $63,000 and rallied to around 68K, which was up 8%. And of course, we are now seeing some form of pullback, but we are still up 6.74% for the week. So if you count from the bounce that we had last week, and this was on the 10th of October, just the last holiday we had, then you can see that Bitcoin has been able to rally about 16%. And once you eliminate the pullback here, it's still up about 14%. And it seems to be one of the biggest news in the market. So we're expecting a continuation of the current bull market trajectory with a lot of speculation that the market may eventually break the upper side of this limit or range. So if I try and remove some of this trend line just to eliminate the noise, just give me a sec. So this has been the path in Bitcoin with this range lasting at least 7 months. So having traded in this sideways momentum, there was always fear that the bull market may have come to an end after the big rally here, which ended in March. So since then, especially after the April halving event, we have been in this range for a while, with the most recent bottom here being higher than the previous one. So this was the first indication that we are almost getting out of the range. Then we got this other bottom here. This was the bottom this month, and the bottom was much higher than the previous one, indicating that now we are on the verge of eventually breaking out. And now everyone is observing this price action area to see whether Bitcoin will actually make the breakout. So a lot of speculation is based on whether Bitcoin will be breaking above that. And so far, we are seeing a potential where the market price could eventually break this area and trade higher. So now the key observation area is around $68,400 per Bitcoin. If we break above that, then that would be a key signal that the market is ready for another leg. So in the previous leg, this is what we had. So the market making such a big move. So if you notice the difference here from this bottom to this high, it was about 92.34%, and it had happened within a period of 1.5 months. So this has the potential to happen again, especially if the market breaks above this particular trend line. So that's why a lot of traders are very excited about that. So beyond that, the dollar index continues being strong. So from the 1 hour chart, you can see that there was this day where the dollar index was unable to form new highs. So in this case, we moved to a high here, and this was on Tuesday, pulled back downwards, up, down, and closed here. So since then, Wednesday, we saw a continuation of the rally in the dollar, and today it seems to be pushing even higher, indicating that the dollar is still being used as a safe haven, especially concerning the expectations about the Israel-Iran conflict. So in this case, we have seen much more progression in the dollar index, meaning that the dollar has been dominating other currencies. So with that in mind, now looking at Euro USD, which is the main pair for the day, following the ECB rate decision that we'll be expecting later in the afternoon, the overall expectation is that the euro continues weakening. So I remember earlier in the week, we had discussed something very important here, and this was the double top formation on the Euro USD pair. So it started here, got to this resistance here. Then from there, got back to the neckline, the same support area here. Then rallied back to the same high, and then came back all the way down. And we speculated that once there's a breakout here, we should be expecting to see some further downside. So after the breakout, notice how the market went back for a retest, then continued dropping, and since then the case has been more of a bearish momentum, with key targets that we had identified being around this area here, that is 1.07821. So there's that potential that the Euro USD currency pair could potentially extend the bearish momentum all the way down to this area here after forming the double top pattern here. So it has been a gradual decline, which means that the market has already been pricing in the rate cut that we're expecting today. So far, in the last 3 weeks, the euro has been down 3.14%. 3.14 is more of buy. So being down 3.14% in the last 3 weeks, it's indicative that the market has been pricing in the rate cut. So this means that it's likely that after the ECB announces its rate decision, instead of the euro continuing to weaken against the dollar, we could be seeing a slight pump. And that should not surprise you. That has been the order of the year. In most cases, we are seeing the market reacting negatively to news. So if news are indicating that the euro will weaken, sometimes you'll see a short-term strengthening, but eventually the market follows the fundamentals and continues in the same direction. So if there is an outright sell-off in the euro, then you go for the short-selling trade. But then if there is a big jump higher, then you still do the same thing. You don't buy, you still wait for opportunities to short. So this may likely happen as follows. The ECB announces the rate decision, euro jumps higher, and then we get the ECB press conference, and then the euro starts losing again against the dollar. And the idea is to trade it downwards to around 1.07821. So it's not always the case, or in other words, it's not always best to be looking to trade the euro against the dollar during news, mainly because we have other events happening in the markets, and it's important to know that with the US expecting retail sales, then we could be seeing a change of trend in Euro USD depending on the outcome of retail sales. So it's not always best to trade the Euro USD. Sometimes you might consider pairing the euro with yet another currency. So just give me a sec as I check these out. So this is the FinViz website, and this is how different currencies have been performing. So clearly, the strongest currency in the market so far is the Australian dollar, and the weakest currency is the Canadian dollar. So in this case, since we're expecting a much weaker euro due to the rate cut, then it's much easier to pair the euro with a stronger currency, such as the Australian dollar. Sometimes it's better to look at the weekly performance. So as per the weekly performance, the dollar has been the strongest. So of course, Euro USD has had the downside bearish momentum happening. But of course, we are expecting news in the dollar. Of course, the second strongest currency over the last week is the Canadian dollar. So this means that looking at the Canadian dollar as well as the Australian dollar as potential pairs against the euro might actually make sense compared to Euro USD, mainly because the US dollar will be having its own set of news, and that's just 15 minutes from the announcement of the ECB rate decision. So notice the 3:15 versus 3:30 p.m., which makes it undesirable to trade the Euro USD because the dollar will also be having its own set of news. So you might be considering Euro Audi as well as Euro CAD as the potential target pairs to use for trading later in the day. So that being said, let's go back to some analysis. So for Euro USD, I think we are done with that. So Euro CAD. So this is what we are seeing with Euro CAD. Of course, we've had some much better movements in the Euro CAD. So from the forward chart, this is how it looks like. A market that has been finding resistance around this area here. A market that has been finding support along this area here. Now, if you remove this, you can see we have had some clean swings. But if you capture one of them, you're able to benefit largely. So in this case, we're expecting a much weaker euro, which would likely retest this support and perhaps extend it further downwards. So the idea is to catch a good swing on this one. Of course, it could potentially drop all the way back down into new levels. So 1.47748 is a potential target area. That is if the euro weakens against the Canadian dollar and we see this huge drop, breaking the previous support areas. So the other one should be Euro Audi. Let me check for that pair. So as for the Euro Audi, this is what we are seeing. So from the forward chart, this is how it looks like. So clearly, a market that recently found some nice support around this area here and could be headed back to the same area later in the day. So from what we are seeing here, it's more like this market has been finding resistance here. And of course, if you look at the support, it has been following this path here. And now we're expecting news in the afternoon, which may potentially lead to a big sell-off in Euro Audi. So most recent price action indicates this as a potential resistance area, as well as the weekly high. So looking at the previous week's low, this is a potential target area. And of course, as per today's news, we could be seeing the market headed for this support. So potentially drop into this area here. Of course, if we break below that support, then we could be seeing a potential free fall, maybe over next week to around 1.6 price level. So that being said, now looking at the dollar pairs, of course, stronger than expected retail sales is expected to strengthen the dollar further. So for instance, if you're trading the pound USD, which has been raging for the day, it had a big sell-off yesterday after the job market report. So clearly breaking out of a range. So I'll just be removing this. Okay, let's just clean the chart, the new template. So it seems like the pound was stuck within this range for quite a period of time. Then eventually we had a breakout yesterday, a retest and a continuation. And with the strong dollar in the market, we were able to break the previous support. And now it seems more likely that the pound is taking some steps backwards against the dollar. And of course, there is that potential that the bearish momentum continues, with key level targets around this area being the next potential target. So we are looking at a potential extension of the bearish momentum down to 1.28587, and this is on the premise of a stronger than expected retail sales report. So on the 1 hour chart, you can see this is a range that the market just broke out of, which means that we are due for the next leg. So in the previous leg, this is what we had, a big drop here, and we're expecting something similar. So something much smaller than the previous leg, but potentially dropping to 1.28587, and this is subject to the outcome of the retail sales report. So the retail sales report could also disappoint. So this is not a one directional trade. So we could also see the market getting back into pattern and potentially heading for this area here around 1.31126. And this is on the promise of weaker than expected retail sales. So that is subject to the news in the afternoon. So pound yen has really struggled to break above this area here. So even if we were expecting some potential breakout, this was on Monday, Tuesday, Wednesday, that has not played out. And what is emerging as the current outcome in pound yen is more of a range bound market. So from this area here, it seems like the market has taken on a range, which means that now we have two horizontal lines marking both the support and the resistance in pound yen. And now we've just bounced from the lower side of the range, and the market is probably or possibly headed back to the resistance, which we have been targeting to use as a technical entry point for a buy trade. But for now, it seems likely that the market will rally towards the previous high. So clearly, nice and easy position for the day. So AUD also having its bearish momentum. So after ranging here for a while, so notice this period here where AUD was just moving sideways before making the breakout, a retest and a continuation. So backed by a very strong dollar, it's more likely that the AUD will be extending the bearish momentum to touch the support around 0.66441. And of course, we have the USD JPY pair, which has been on a bullish trajectory. So having broken this area here, which was kind of tough to break. So this was the previous resistance. So after the market got to that previous resistance, notice how it struggled to break above. But then eventually we have seen the market break out, pull back, and now it seems more likely that we are facing a continuation. So if I clean my chart here and we go back to the same thing, then you can see that we are looking at a rising wedge. Which implies that the market is likely headed here to around 150.417. So that's the potential target point for USD JPY for the day as we continue seeing the dollar being strong against other currencies. Of course, that could change in the afternoon after we get the retail sales data. But between now and then, it seems more likely the market will continue in that trajectory. So Japan Nikkei 225 index clearly struggling to maintain the bullish trajectory or the bullish momentum. So after the big sell-off and some form of recovery, so far the market has really struggled to break above that. So from the forward chart, it seems like we are seeing a very weak market. So clearly, values around this area here have been good for entry, and it seems likely that the market is bouncing from the same trend line here. And if you look at a smaller time frame, in this case the 1 hour time frame, then this seems to be some good evidence of buyers coming in the market. And of course, erasing the early morning losses, so we could be seeing an extension of the bullish momentum. So US equity indices are making a very strong recovery from the sell-off that we saw on Tuesday, in the hope that we continue seeing a bullish momentum and we get some good retail sales report. So this is a key level to observe. Notice the resistance here and the second and third point here. The market is currently testing this area, though the amount of bullishness we are seeing in the markets today implies that we could be seeing some further upside in equities. So for now, as we enter the earnings season, there's that potential that the market eventually extends the rally to the previous high. Of course, from the daily time frame, we are not yet at an all-time high in the Nasdaq, but this bullish momentum that we are seeing today is expected to continue towards the afternoon. And it's the same thing for the Dow Jones, which managed to pull a comeback yesterday, and today is looking to extend that to get into a new all-time high. So the Dow Jones will likely get into a new all-time high today as it continues pushing higher. So in the short run, we expect at least some good momentum towards that area. So the S&P 500 managed to form like a 50% pullback or recovery after the sell-off on Tuesday. And today it's extending that rally and it's potentially going to hit a new all-time high. And the all-time high is around this price action area, 5,872. So as for gold traders, I remember we had some analysis earlier in the week where we said we had a breakout and a retest that was done twice. So market made another rally here, went back and confirmed the same trend line here, eventually making a very strong rally towards our target area here. So the last time we did an analysis on Tuesday at 4 p.m., the market was trading at around this area here, then continued extending the rally. Then Wednesday, which is yesterday, we eventually got to target, and now the market is retesting the same area. So from the 4-hour chart, this is how it looks like. So we are looking at a market that is flirting with the all-time high of 2684. Of course, we know the next target is 2700. So we don't know when it's going to happen, but we are expecting strongly that we will be seeing 2700 price action area soon. Of course, if you go to a smaller time frame, such as the 4-hour chart, you can see 2700 is not very far off, and the market could potentially extend this rally to 2700. So from the 1-hour chart, this is how it looks like. So in this case, we are basically looking at the potential of the market breaking above that area and then look to extend that rally to 2700. So we'll be observing gold closely for the day, and if there is that breakout, then we head straight to 2700. It's not guaranteed that it may happen today, so you have to be aware that this being a very strong resistance area, also we could be seeing the market using the resistance to pull back downwards and potentially going back to 2670. However, it's more likely that we will be seeing some price action happening in the afternoon. So be prepared, observe the market. You can use even smaller time frames to see when momentum is coming in. So in most cases, you'll see one big candlestick that is unidirectional, that indicates the direction that gold is taking, and that will likely be the signal for the day. So for Brent oil, we had a big sell-off. I remember talking about this earlier in the week. So we expected at least a bounce somewhere. So this didn't play out. So I'll show you using a smaller time frame. Okay, let's do the daily. So the overall momentum in Brent oil has been bearish. So we had a good rally at the beginning of the month, and since then the Brent oil prices have been erasing the earlier gains and pulling back downwards with the expectation of Israel hitting Iran, causing a big sell-off earlier in the week. So this is the big sell-off that we witnessed on Tuesday. This was about 5.37%. And since then, what we have been seeing in Brent oil prices is more of a range. So after seeing the big drop, the market hasn't done anything more. So from the 15 minutes chart, this is what we are looking at. A market that is finding some form of resistance along this line here. And if you look at the support area, I would say it's also kind of horizontal. So let's use a horizontal line. And this has been the range for the last 2 days. So we haven't seen much of a price action activity in Brent oil prices. So we should be waiting to see a potential breakout to get a directional trade. So far, it's more or less like the market has been moving sideways. So eventually you'll get that break. If the break is towards the upper side, go for a bullish position. Of course, if it's towards the lower side, you go for a short selling position. But as long as it remains within the range, then we remain patient. So among other markets that are making news, we have the dollar trading against the Swiss franc. Of course, this is also dependent on the outcome of the news, that is retail sales in the afternoon. But then I remember doing this analysis when the market was still within the range. And we said whenever we get the breakout, this is when we go for a position. So in this case, the breakout was towards the upper side, which led to a bullish trade. And since then, the market has been moving higher. In this case, the dollar gaining ground against the Swiss franc. So it's the same idea that we just discussed in the previous chart. So dollar trading against the Canadian dollar, a very strong rally. So I remember we were counting candlesticks here that were indicating the bullish momentum. So we had a consequent 9 trading sessions where the dollar was just gaining against the Canadian dollar. Then we had a pullback. Remember, in such a trend, it's usually very scary to buy on a high. So we normally wait for a pullback to continue trading. And now, after getting a 2-day pullback, it seems like the dollar is currently very strong and regaining ground against the Canadian dollar. So after the nice pullback here, you can see evidence of buyers coming in strongly and pushing prices higher, which implies that we could be likely seeing the market going back here. So on European equity indices, we have the UK 100, which has been quite volatile. So it had a big sell-off here on Tuesday. On Wednesday, it bounced quite strongly and got back to the previous high. So this is how it's looking. So if I literally clean my chart here, you can see it has been one very noisy market. So with this area acting as support since around August, and this area acting as the resistance, now we are seeing a break outside that sideways momentum. So we can say that for a majority of these weeks, about 7 weeks, the UK 100 index has been trading this way with no exemptions. And now we have a breakout towards the upper side, indicating bullish momentum, and we have a retest here. So it's quite normal and expected to see the market breaking out of a consolidation, pulling back to retest the area, and then eventually making a run in the direction of the breakout. So in this case, if I zoom out, it's more likely that the market will be headed towards the previous high. So in this case, a bullish momentum towards 8,417 price level. So now looking at other indices within the Eurozone, we have the Euro 50 cash index, also quite strongly bullish, bouncing from a key level support. So now we are looking at the market heading here. So it's the same as last time we discussed this. Market got to this area, bounced and went straight for this resistance area. And now as it plays out for a short-term intraday trade, this looks like a favorite towards 49.77. So for the Spanish IBEX, we are seeing a market that is currently testing a major resistance area on the verge of a breakout. So from the daily time frame, you can see it's quite a strong market. So we should be watching this area to see if there's eventually a breakout. If there's no breakout, of course, we expect the market to pull back downwards, but that breakout is more likely than not. The German stock market index has already made a full recovery from the recent 2-day sell-off. So it seems like a key theme across board for equity indices. And of course, we have the France 40 index. Clearly, after the sell-off earlier in the week, we are seeing some good recovery, and the market is on the verge of getting back to the previous high. So very short-term extension to the current rally to around 76.17. So if I had to choose a chart for the day, I would go with the Euro 50 cash index, which is expected to at least reach 49.77. So I would also consider the UK 100, which is more likely to bounce from here and head to 84.17. So from the 1 hour chart, we had a retest, and now we are looking at a potential continuation. So for currencies, especially Euro USD, in this case, it seems more likely that we will be seeing some further downside momentum before the news at 3 p.m. So further down bearish momentum. And on the commodities side, for gold, it's more of a wait and see scenario. So we are very close to the all-time high. And now, if we see a continuation of the same, of course, our target will be the 2700 price level. That hasn't happened yet. So the chart is still kind of noisy. Notice the price action in the morning. We go to yesterday's high, pulled back, retested yesterday's high again, pulled back. So it's a market that is consistently attempting to break that high and get into a new all-time high with the potential risk of the market moving back downwards. So we don't know this yet. So we keep waiting until we have enough evidence that the market is taking that direction. So on the side of US equity indices, I would be bullish on the NASDAQ, where we are currently breaking this previous resistance. You can see the number of times the market was rejected before, but now it seems to be a clear break. And once it plays out, the extension of the rally is expected to be a full recovery from the sell-off we saw on Tuesday, which would lead to a price action level of $20,500 per share of the NASDAQ index. So that's it for the day. Let's look at a couple of questions, respond to them as we approach the end. So there's a comment here. I think BTC has broken the range. No, it has not. Just look at your charts carefully. It hasn't broken the range. This is the range. All you have to do is to draw a trend line from the previous high, connect it with these points, and you can see that it's currently at the range. So we haven't broken yet, but we could be seeing a breakout soon. So the other question is from Ken Moniki. So Euro USD started the bearish push at the beginning of the week as the market priced the ECB rate cut. What's expected move as the news of retail sales is also due roughly at the same time as ECB. So as per my analysis, I think the rate cut has already been priced in. So the potential for the euro making a big jump higher at the market announcement is more likely than not. And then later on, we'll be seeing the market eventually pricing in a much weaker euro. So perhaps a negative reaction is expected at the announcement of the ECB rate decision, and more streamlining might happen at the ECB press conference. So there was a request to check on oil. I believe we already did that. So it's in a range. We just wait for Brent oil to break out. Then we'll have a direction. So we don't have a direction yet. So for 2 days, Brent oil has been moving sideways. Top scale, most promising pair today. We have already talked about that. So good question from Max. And under which circumstances does gold and the US dollar positively correlate? They mostly positively correlate when there's uncertainty in the markets. And when I talk about uncertainty, I'm talking about a period of time when there's fear and let's say geopolitical tensions and so on. So in that case, gold is used as a safe haven, and the dollar is also an equivalent safe haven. So when people don't know what will happen with the US election outcome, when people don't know what will happen between Israel and Iran, then they tend to protect their positions by buying more gold, buying more dollars, buying more Bitcoin, and so on. Good morning, Rufus. Can you check the yen basket? I've not been understanding what's happening of late. So the yen is still currently experiencing problems after they hiked interest rates and their currency gained about 13% against the dollar. And after they witnessed that gain, the Bank of Japan had to pull back and they promised the market that they will no longer be hiking interest rates. So after that promise, we started seeing the reversal, and all other currencies have been gaining against the yen. If you go to the daily time frame in pound yen, this is when Bank of Japan changed its policy, decided to hike interest rates. The yen really strengthened against the pound. So we had this big drop here, about 13%. And since then, notice that the market has gone back about 50%. So it's the same thing across board. If you go to the daily time frame on USD JPY, this was at 13.89%. So Bank of Japan decides to hike rates. Then we get this. Then they promise the market that they will no longer hike rates. And then we get this. So we are right back to 150, and there's still more room for upside, with the next target being around 151.806. So overall, it's an initial reversal of monetary policy. And in this case, we are seeing some further upside. So clearly, yen pairs are a currency to short. So there's this comment from Waziri FX. So we expect the EU to dump. No, 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 no. For the last 3 weeks, we have seen the Euro USD continuing to weaken. So why would it dump after the market has already priced in the rate cut? So from this period here, the euro has just been losing every day to the dollar. And now we have the news coming up. So it's more likely that the market might reverse at this point. So potentially, if there's a big drop, it will get to 1.07821, then we see a bounce. So of course, there will be profit taking for the people who have been shorting the euro, expecting that the ECB will be cutting rates. So we might see a negative reaction to the news. So just be patient. And of course, you could short it right now and exit later. But at the market news, it seems like the news have already been priced in. So I know our time is up. We are already at 12. Kindly check the session we did on Tuesday on this question, Sila Kisavi. It's something we covered on the Tuesday session, and it's available on the FX Presser YouTube. It's also available next. We basically discussed US equity indices and how they behave at market open. So that will likely answer your question. So question from Ken Moneki, UT100, what is the expected reaction to both retail sales news and Netflix earnings released today? So for equities, monetary policy seems to be favoring equities. So a better than expected retail sales report will likely lead to a strong rally in all equity indices. Of course, Netflix is a part and parcel of the NASDAQ as well as the SP 500. So positive outcomes will likely lead to a strong rally in both. So good comment from Thomas Mashuma. seems you can enter on the 1 hour time frame vis-a-vis 15 minutes time frame according to your analysis. Yes, they are just candlesticks. The price is always the same. If you're looking at a market buy or a market sell, it doesn't matter how time frame it is. Yes, analysis can matter, but if you're doing the trade, then regardless of the time frame, it's still the same price. So, hi Rufus, can we expect the Canadian dollar to continue weakening, especially with the impending rate cut? Yesterday, it showed quite some strength. Is it logical to expect USD CAD to resume a vigorous bullish momentum? So, the Bank of Canada has cut rate 3 times. Inflation has continued to drop below its targets. And as a result, there's no reason to keep rates high. We're expecting yet another rate cut from the Bank of Canada. So, despite the recent short-term strength, the overall expectation is that the Canadian dollar will remain weak for the better part of the remaining part of the year. So in this case, I expect some much more weakness in the Canadian dollar compared to other currencies. So last question I'll be answering today. I want to join Forex. The thing I would advise you is to kindly check out the Novice to Pro series. It's a course that I developed on FX Pesa YouTube. It will help you learn some of the basics and transition from a complete beginner to at least an intermediate level trader. And with practice, you will become a pro level trader. So make sure to check it out. And thank you everyone for joining the session. Thank you for your contributions. So remember to check out the newest episode of the Bullish Banter podcast. It's available on FX Pesa YouTube as well as other podcast platforms. And at the same time, if you'd like to register for a trading account, remember to check the links in the description below. And of course, if you are watching this on X, you can always visit the FX Pesa handle. So that's it for the day. Enjoy the rest of your day and have a fruitful trading week. Remember, whenever there is an interested decision by a major central bank, it doesn't mean that you expand your risk appetite. So protect your capital at all costs and trade the same way you trade on a Monday when there is no news. Basically by being more logical and reasonable, and always trade what you see. Thank you everyone, and I hope to see you on the next one.